It's not the same as it was in this world. Good morning, good morning. That's funny. So the cleaning lady comes in on the weekends, or the cleaning man, or whoever it is. Don't want to be politically correct. But anyway, good morning. It is 6:31. It's a new week. How's everybody doing? Hopefully everyone had a good weekend, recharged the batteries, watched a little football, hung out with the family, did a little fitness, maybe watched a marathon, maybe ran the marathon. If you did, congratulations. I love the marathon. I did about 8 marathons, 2 Ironman, did Boston, so I know how it feels. So hopefully if you did it, you're feeling good. You had a big burger and a beer after. Anyway, my name is Scott Redler. I'm the Chief Strategic Officer, T3Live.com. Welcome to today's 6:30 Club, where we're going to go over what could happen this week. You know, I'm sure everyone is thinking about all the things that they did last week, all the things they could have done, how they could do things better. At this point, you know, you learn from what happened, and you just try and move forward. Some people think they should have made more money. It's supposed to be the best week of the year. Some people, you know, got in early, got out early, or maybe you flipped a little short a little early, whatever it is. You know, put it behind you and figure out how you can approach the market moving forward. It's only November 6th. We have a lot of year left. I do think this is going to open up the trading a little bit more. So if you look here, you know, at the chart, you look at this weekly chart. Okay, this is a weekly chart of the S&P. So, you know, as an active trader, which is what I am, I get paid for a living trading. You know, I do it quarterly. Most traders get paid monthly. I like to go quarterly, so I don't have to worry about the last few days, the first few days, and just trying to do the right trade so you can make as much money. And if you look at this chart here, you will see I try and talk about active sequences, actively bullish sequences where you could have some money at risk, actively bearish sequences where you want to have a lot of cash and be more flexible, be more tactical, and you can see so many of them. Okay, this was the high that we put in on January 3rd, 2002. And pretty much, you know, we were in this descending channel pretty much all the way down to, this was last year's lows, the October lows. Remember those? This is when everyone called for the end of the world and the recession. But anyway, here's kind of where we broke the descending channel, came back up. This was the highs of the year. This 4607 kind of matched where the 4637 was. And then we just pretty much, you know, came in pretty like 10, 11% or so off the highs, whatever it was. And then yesterday, look at the size of this candle. Some people are like, hey, Red Dog, is this, you know, is this a cup? And is this your handle? And are we going to take out 4607 and 4818? It does have the cup and handle look. And there is a chance that we could take out 4607 and 4818. Nobody knows exactly when that's going to happen. It could happen, you know, in 2024. It could happen in 2025. We shall see. At this point, you know, fundamentally, narrative-wise, you know, do we think inflation peaked? Yes, I think people said inflation peaked 6 to 8 months ago. The question is just how fast will it go down to the Fed's goal, which I think is 2%, which is probably unrealistic, but that's what that is. And now people are saying, hey, Red Dog, did rates peak? And it does feel like rates peaked also. Doesn't mean they can't bounce around. Doesn't mean the Fed is going to cut rates like everyone says. Just means that they're probably done raising. They probably peaked into last week. So now the question is, where do we go from here? So I do think we're going to have really good trading, hopefully, the next few weeks, considering the participation we had last week. You know, the SPYs, the Qs, the small caps rallied, the banks rallied, energy rallied, little guys rallied, gold, you know, had a monthly move. You know, so there's a lot of things participated. So at this point, I do think there's gonna be a lot of good setups coming in. The question is, what's your time frame? So the reason why I always give you Redler personal, because, you know, my name is Scott Redler. I am 51 years old. I've been in the markets for a long time. I do have some experience. I have a freshman in high school, you know, blah, 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 blah. You know, so this is what, you know, I am. I also did found T3. So, you know, we have we have employees of T3, and then we also have prop traders, okay, that trade in our BD. And then we have retail traders, and everyone makes different amount of money. So I have the luxury of being the founding partner. So it's as if I work for a company. So I do have a 401k, and I have all of these things that if you work for a company and you're not a professional trader, you know, you could trade on the side for cash flow, and then also save for the long term. And saving for the long term is key. Maximizing your 401k is key. Starting a 529 when your son is born is key. If you're in your own individual business, having a 403b is key. And then also, having multiple accounts like the blood and the street account. So anyway, as Scott Redler, Chief Strategic Officer, employee partner of T3, I have a 401k that I've maxed out. So I talked to you guys about putting flows in every single month, because if you try and time me long term, you miss a week like this, and all of a sudden, your gains aren't what they should be. That's long term. And then obviously 403b is the same thing if you're in a private business. And the blood and the street account, I've gone over with you so many times on, here I put it to work 3 times. I did it like 3 times, sold it, 2 times, sold it, and into this down move, I put it in twice. So with that being said, half is in a fixed rider and half is in the actual, the market again. And I'm probably not going to get rid of it unless, we get above 48.18 at some point, whether it's a year and a half, we don't know. So the new narrative moving forward is going to be, the bad news is good news, meaning the slowdown of the economy is what the Fed wanted, and that's why rates peaked, and that's why the market rallied. There might be some point when all of a sudden, how slow are we getting? Is this going to be a real recession? If that's the case in the PE, or are they going to be able to orchestrate a soft landing? So from now, next few months, it's going to be really more about how slow has the economy become, with raising rates the way they did, and can we absorb it, and is it a soft landing, hard landing, and at some point, bad news might turn into bad news versus bad news is good news. So anyway, let's go to the daily chart. The daily chart is a little interesting because, we had this massive move, which was a massive move last week. I personally had a really good week. I could have did a little bit better. Why could I have done better? Well, on this day, I started to sell premium higher as a hedge to my positions that I was massaging. So I wouldn't mind a pause here. I wouldn't mind that if this 43.73 to 43.93 turns into a short-term little peak, which would then also kind of go with this downtrend, and then we pack and fill, and maybe even, it wouldn't be the end of the world if we tested one of these gaps this week. If you go like this, the low from Friday was 43.39. You have a gap here. You have a gap here. This is a big move. The oscillator hit plus 74. We were minus only 50 down here, and this was plus 74. That's a big move. So, granted, you don't want to fight this move, but you have to be a little careful entering, fresh. And then all of a sudden you get a little pull in midweek. Powell speaking Wednesday, Thursday. I'm sure he's going to reiterate higher for longer, and you might get a little bit of a of a shakeup. So I would be a little careful actively. Just all of a sudden, like spies are up $1 this morning. All right, I missed last week. I'm buying 5,000 spies today. All right, chances are, you might have been able to buy them a little bit cheaper at some point later this week, whether it's tomorrow, Wednesday, or Thursday. That's all I'm saying. So just be careful. Also, you got to be careful too, because if you start shorting too early, you're in pain, and now all of a sudden, if we don't pull back at all, it's going to turn into this pain trade where traders are just trying to take the other side of the trade. So anyway, it wouldn't be the end of the world if I go to the spies if if all of a sudden we opened up around this 435 and came in and did a little bit of sideways action here. Let it work off the over bought condition just for a few days, if it's going to happen. You do have this 437 to 438 area, which is, a resistance above. Everyone's like, Red Dog, doesn't all gaps get filled? I'm like, all gaps don't get filled. Sometimes gaps give you a direction. A lot of those pro earnings gaps that we've been playing have been doing great. So anyway, this is 433. It wouldn't be the end of the the worst thing for me if all of a sudden we opened up and you could trim into strength. I do have some longs on, and then we kind of hang out in here and go sideways, and then get a nice juicy trade over there. But we'll see. Sometimes this market just is crazy the way it goes. It just one way and then the other way, one way then the other way. It's not really systematic, but it is what it is. You've had places to readjust. I remember this day was when most of us all readjusted. this was hard, going into this. Everyone remember there was, you read over the weekend on Twitter on that day, 1987, 1987. They tried to scare the bejesus out of everyone, and then this happened. Market's funny. Anyway, that's that. So 436.29. Do we fade in front of this as a push above, come back below, create a red dog reversal, or push above and give you another move? We shall see. Q's stronger. Q's held the 200-day. A lot of tech names with a place to be at this point. You have 369.01. That is Friday's high. This also has a bunch of gaps here. It wouldn't be the end of the world also if it held in here for a day or two, but we'll see. Above 369 is 373, and then you have 376, and then 380 and 387. Here's your downtrend line also. So see how it goes today. Small caps gave a little bit of a catch-up trade. Wow. Actually, this wound up being one of my best trades last week, just because instinctually, when we had it came above here, and it did feel like all of a sudden this rally was going to be for real. We bought the 165 calls on Wednesday into Thursday, made over 200%. Then I was like, let me take that down, and then I bought 171 and 172s, and this move happened. So anyway, this wound up being a good trade besides the swings we were holding in Microsoft and Meta, and I just had Amazon for a little bit and Netflix. So anyway, but this also should help clear some, loosen up trading a little bit. That's a nice pushback. So where do I think this can go before? I don't think it happens in a straight line, but I don't see why not 179 to 181 can't happen at some point. Let it digest a little bit above this gap. Wouldn't be the end of the world either. And then build a little bit of a bull type flag here, and then continue. But we'll see. This is a big gap. That's a big gap. Do we hold them? And then we talk. I remember Tuesday, Wednesday last week. I'm like, guys, this is like the pecking order of of my go-to list, which looks the best. I'm like, Microsoft is the strongest. So I've been in Microsoft since I think right in here, and Microsoft looks like it's on its way to 366. Obviously, trim into strength and hold it. Meta, also really nice. This actually feels like it still has a really good setup where you might even be able to add to it this week. Get another few inside days here, and then I don't know how many days, and then maybe it takes out 318.35, and then here you have this channel here where it's still been going, it's in consolidation since July, and it had a really good earnings. So I've been in this, I think, since this day, and I'm going to stay with it. I'm going to massage it, and hopefully I'll be able to add through at some price points and continue to make, really good money there. Amazon, it's a little tricky. Did Jeff just move to Florida so he could start selling his stock for a lot less, a lot less taxes? At this point, it's below, the September high, and it was a little tricky. But this was your post-earnings day, and look where it went. What's it doing today? Amazon is up 15 cents, not a whole lot. I'm thinking about, can I re-enter Apple? I haven't really been focused on Apple for a little while, just because it's been lagging and hasn't been the place to go. By the way, remember we said 171 held, it did. This gap is now gone. You do have a downtrend here also. I would think if this, first of all, if you're an investor in Apple, just stay the course. You're doing great. But maybe at some point, people will be like, all right, you have the buyback, you have the dividend. It's come off the highs. If there's a good setup here, maybe you could, maybe you could be long versus 173. So I'm going to figure out if I want to, put this back on and hold it a little bit for it to then, break this downtrend and have more exposure. I got to figure out responsibly also, how does Red Dog get more exposure to this market? Because right now I only have 4 positions, and I'm hoping that the market pauses for a day or two. A lot of people are like, why did I buy China? Well, I bought China in here a lot. I bought a decent amount of options, thinking that China's going to play some catch up. If you think about where it is, it's on a whole lot of nothing. Just to even get back to the 200 days, 27.71. So that wound up being a pretty good trade also. AMD, look at that move. Wow, right? I had a big call spread going into earnings, and that one maxed out really nicely. I did sell my AMD. I don't have any on now, so I have to figure out, how do I get back involved here responsibly? I think that's what a lot of people have to figure out is, if you're not long enough coming into today, You don't want to just short things because you're not long enough, and you don't want to just buy things because you feel like you miss things. So you have to have self-control. NVIDIA, big move also. Remember when Kramer last week was like, don't buy the market, it's just the hedge funds closing out the year, don't get baited in. So all week he said don't buy, and then, Friday he said, I love the market. That's why you can't listen to the guys on TV. And he was saying how bad the chart was all last week. And P.S., it did look like it could break this neckline of the head and shoulders. And what happened here? Red dog reversal. Reclaimed 398 and 404. This candle changed everything right there. That's been like this whole narrative of this market. If you miss that little change, you can get run over if you're short and miss an entry if you're long. And that's why you want to always be thinking as clearly as possible and working on your process and your routine. So this way, when things happen, you could execute with confidence, right? Next setup, think clearly, execute net money, move forward. That's what we've been trying to do for a few weeks now. But anyway, so now NVIDIA, let's see what NVIDIA is. NVIDIA is up another 5 at 455, above 453. I guess this is your next resistance area around 4. This is 476. This is 471. So, there is a little bit of no man's land here. So for today, if you did not buy NVIDIA here or the day that it really, showed some power, I don't think you could buy NVIDIA up there. That's like the thesis of the day. If you missed the 5-day rally, don't be buying on day 6. You just got to sit back and say, okay, why did I miss last week? And how do I, get myself situated so I could participate in the days and weeks ahead. That's like the thought here. So we'll see. As far as Netflix, I sold it. I sold it on this day. Bought it in here. Looked great against a pro earnings gap, and look at that move. What's Netflix doing today? Probably up $3. It's up $1.22, 433. What's this high here? That's 434. So again, this setup is a tough setup just across the board where, you have a lot of things on day 6 up. You have the oscillator went out plus 72. It's probably plus 80. The participation was so strong that usually that indicates a strong month or two coming up. And some even say it means a really strong year next year. We shall see. At this point, maybe we get some kind of retrace today. Maybe Powell on Wednesday, he's speaking, comes out and says, hey, he's not going to do a victory lap, but more be like higher for longer. We're not looking at cut rates. And then maybe, that, causes some kind of retracement in order to be a buyer. Like dips should be bought now. I would think someone's like, where do you think if we did pull into? I'm like, well, don't start looking too far at where do you think we hold this? A lot of people are talking about an inverse head and shoulders pattern where this is the left shoulder, here's your head. This could now be the neckline. So I would think if we did pull in, which would be nice, which we might not, I would think, this area holds, and this could create some kind of right shoulder for them to take this out. But the way this has been elevator up, elevator down, no escalator, no, back and forth. It's just they just want to keep everybody from missing out in some capacity. But this would be a big spot, So here's right, 433 feels like a long time away now. But there you go. As far as other setups, at this point it's hard to find such setups because of the size of the move. A lot of things are coming into downtrends where they might pause or they might push through first and really squeeze everyone and then come back to it, and that's where you buy it. I think Google's fine. Google's pushing into this earnings gap. It's not leading, but it's been decent. Just doesn't look like anything chart pattern wise. Tesla did the same thing as NVIDIA. What do I mean by that? Well, it looked bearish, technically challenged, and then it did a red dog reversal to have you cover some shorts and maybe get a little long, and that was on this day. Okay, and then if you wind up shorting into here because you're like, wow, from 194 to 226.37, look at that little topping tail. It did show a little relative weakness on Friday by retracing more than other things and giving you a little, topping tail. And then this morning there's some news about, one of its gigafactories, this and that. So here it is at 224.46. below this 236. If you are short from Friday because you were trying to play each end of the range, well, maybe you add a little bit if you see a signal of a negative divergence. But if it all of a sudden takes out this 226.34, there's a gap right above it, and it's still like nowhere. Look where this high, that high, that high. It's just right now a range trade bounce that hopefully, if you recognized right here that it reclaimed 194.67 and closed okay, and then held to it the next day, you didn't get caught in a short squeeze and you made a little bit of money long. I would think most traders that I know participated last week, but didn't think we were going to have the size of that move. Me either. On Friday I made money, but I started to sell some premium above to try and hedge and be, prudent. I guess prudent's the word. And now, I'm in a spot where I'm long. But if we start getting above, if we just take out this 437, 438 and see 444, Red Dog's going to be caught in a little bit of pain with my hedges. So we'll see how it goes. Just have multiple plans in your head. If you are looking to space out a hedge into a little bit of a cute pullback now, because that's what it is, it'll be a cute pullback. You used to have like cute longs because we're in a downtrend. Now with yesterday's move, puts us back where the active bulls are in control. You should be able to buy dips, but into this oscillator where it is, and you're short term, it could be a very interesting few days. So just know what you can handle, and also you don't have to be perfect. Like I feel like, if we rally today and my strikes are 437 or 438, I'm just going to let it convert me short to SPYs, which would be my hedge that I could trade around at some point this week, but I'm still long the names that I like Meta, Microsoft. I'm actually in AI. I do have the IWM big call spread on. I have a lot of FXI straight on. So, I'm trying to maneuver things versus just, day trading pivot points, which you can make a lot more money when you're in a good trending market where you can put a lot of money to work. And, at this point, we'll see if we could do that in the weeks ahead. So anyway, it is 6:53. It's November 6th. Futures are up 12, 13 handles. We'll see, does early strength hold or fade? Fading wouldn't be the end of the world, but it doesn't mean it has to happen. If you come in flattish, don't be just chasing longs off the open. Hopefully you do have multiple plans. So, if you are putting money in every single month into a 401k, it's weeks like last week that give you a nice push, and it's down moves that help your average cost. But that's a whole different thing. If you trade for a living, and you're in a hole, hopefully, you made some nice money back the last week or so. And if you missed it, then just make sure you clear your mind so you could see the setups that are coming in front of us. So this way you can participate responsibly versus, what's the word, like erratic or spontaneous or, just whatever it is. You want to be patient right now. Now you have to be a little bit more patient because of the size of last week's move. It's going to be tough to maybe fade and tough to buy. So, let the trade come to you. Remember, you don't have to be perfect to make progress, and just try and put yourself in a situation where you can think clearly and make the right choices, the right decisions in the right conditions, no matter what it is. Everyone's like, Red Dog, did you, skip your ice plunge and sauna routine because of the market got better? I'm like, no. I'm like, my process and routine is every single day. Bear markets, bull markets, active long sequence, active short sequence, lots of cash, lots of money. I get up every day, get in the sauna, 200 reps, listen to a podcast, look at what's happening around the world. Then I go outside into my ice barrel, which is getting nice and cold now, and I sit in what I'm like right now. I'm like, I have some longs. I'm like, I need to trim some of this, maybe fade some of that there, look to see if this holds there, and I'm just thinking about everything in my head. So this way, when things start to move, when the market moves, I'm in it. And I have, my decisions ready to go with whatever transpires. Got to do the same thing, when you're in a down tape, right? So you don't miss the turn or you don't overshort, and when you're in a sideways tape. So bottom line is your routine and your process is what you need to do to sustain yourself over time, no matter what the conditions are. It's so you could see the situation in front of you. Thanks for tuning in, guys. I'll post a few charts. I'm going to go do about 35 charts for the Alpha team in Red All Access. I'll be on Sirius Satellite at 9 o'clock today, and then I think I'm on another thing tomorrow, and then I'm going to be in the city on Wednesday with my friend Liz Clayman for our every 2 week in studio segment. But other than that, I'm going to trade right here to try and make money just like all you guys. Bye, guys.